earned wage access products. These are apps or services that allow people to advance money that they are yet to earn. Others call it instant pay, early wage access, or on-demand pay. It's a financial service offered to employees, meaning those who can prove they have regular employment. It's a massive market. It's seen as a healthier alternative to high-interest payday loans. It's been around for more than a decade in some form. When it went digital, and many companies started offering apps, the accessibility made all the difference. When the pandemic hit, people lost jobs and turned to app-based services while stuck at home. According to the California Department of Financial Protection and Innovation, 2021, 7 companies provided a total of $765 million in advance payments to California consumers. Across companies, there was a 60% increase in advance payments from Q1 to Q4, or approximately $91 million worth. One of the most popular earned wage companies is called EarnIn. EarnIn does not charge interest, but charges a fee. Many of these companies are aware that even if their original intent is to help address short-term liquidity problems for underserved people, it has really gotten out of control. The concept is no different from credit cards or any other buy now, pay later scheme. Instead of using it for emergencies, it's become a hole consumers dig deeper and deeper, eventually burying themselves. Different companies are offering different terms, finance charges, and models to keep people in. It's always the most financially vulnerable who become the victim. Before I became an entrepreneur, I was also an employee and know how it feels to not always to make ends meet. Like many of these borrowers, I failed so many times. There were 3 things that I prioritized that helped me get on the right track: good insurance, retirement savings, and emergency funds. First, emergency funds. I'm not a fan of cash, I've made that very clear, but I'm also aware that it is still useful. I do have some. A bit of cash helps me avoid liquidating assets or to resorting to services like earned wage access if I need to pay for something right away. Every month I started putting some of the earnings into an emergency fund. Next, insurance. I make sure I'm covered as much as I can. Health insurance, home insurance, gap insurance. No matter the need, I don't have to tap into my savings or an emergency fund. Last, retirement savings. I have both a 401k and an IRA. Knowing that I was saving for retirement gave me the freedom to take risks with other investments. That's how I ended up starting my business. Security, that's the key word. Secure yourself, secure your family. When you have that down, it'll be easier for you to take more risks. And it's really the risks that can give you some unbelievable returns. Sure, there are a lot of entrepreneurs out there who laid everything on the line, sold their houses, cars, and everything they have to fund their businesses, and some of them have succeeded. There's also many that have failed. If you don't want to risk it all, remember to lay down some of the foundation first. Insurance, emergency funds, retirement savings. As you know, there are different types of assets you can invest in, different types of retirement plans. If you're looking at diversifying into precious metals like gold, you can download our Noble Gold Investments and our Silver Investment Guide. The link is in the description box.